talking about result reaction, that's something that we are seeing on Minda as well. Let's try and decode the Q4 performance and the outlook going forward. We have with us Mr. Sunil Bohra. He's the Executive Director, Group CFO for Minda, joining us on the show. Sunil, hi, thank you so much for making time and speaking with us. Well, I wanted to begin by understanding what's the demand situation on the ground, because for now, the revenue breakup is tilted towards four-wheelers, which has almost 55% of your revenue contribution. How's that mix likely to shape? What's the demand trend on ground when it comes to two-wheelers?
Yeah, good morning. So in terms of demand, we have seen month on month there is improvement in current quarter also. The volumes for both two-wheeler and the PASCAR segments are better. We know that the OBD2 norms have just kicked in from 1st of April, so there has been some volume impact in terms of production in Q4, but it has now back in terms of volumes in the two-wheeler segment. PV segment also continues to be robust. While in some pockets there is still some challenge in terms of the semiconductor issues, but they are in patches, so nothing much to worry about. But yes, there is some impact. But if we see the trend consistently has been on a positive side. In the past car segment also, if we see, we have been consistently able to increase our kit value. If you would see our kit value across segments, across categories, we have been able to do a much better in terms of growth year on year. And if you see the trend for last 4 years, there has been significant addition in the kit value. So in terms of overall pie, as you asked, definitely we do expect that tilt more towards PV versus two-wheeler, while two-wheeler segment is also doing well. But the more business we have added is from PASCAR perspective. In two-wheeler segment, as you know, we have added a lot of new products in terms of our EV basket. So we do expect two-wheeler also to catch up fast as the penetration for two-wheelers gather space.
Right. Mr. Bohra, could you talk to us a bit more about that EV portfolio that you just highlighted? What's the order value, order book looking like? What are the trends that you are seeing? What kind of growth rate do you envisage in the EV vertical?
Yeah, so in terms of EV vertical, we are already having orders worth more than 1,000 crores per annum. We've been consistently adding a lot of businesses. If we see the last quarter itself, the EV volume as part of the total EV volume in two-wheeler segment was roughly 4.5%. But in terms of our revenue is almost 8 to 8.5%. So the delta which we have been expecting, it's clearly visible in terms of higher revenues from the EV segment. The kit value which we had for IC engine was roughly around 8,000 rupees per vehicle, which grows to almost 35,000 rupees per EV two-wheeler, which is already in production or something will get into production within this year. So in terms of kit value, we are expecting a significant ramp up. And as we move to the next year, we will be commissioning our EV motor plant in second quarter of this fiscal. And also we will be sort of commissioning a lot of our products in terms of our EV JV with Freevo. So both these products also will get kicked in from second quarter. So we are expecting a significant bump up in terms of revenues in the two-wheeler segment as the volumes also grow, and we also keep on adding more and more business to our kitty.
Is EV business more like a business where you're moving because you need to hedge your portfolio, or is EV business something which is strategically important for you because that is a high margin business?
I won't talk about comment on margin immediately because volume is less, but I can tell you strategically, we first of all do not have any significant risk when we move from IC engine to EV portfolio. So if you see our products, our businesses, we have no product in our top line which has got any significant risk of transitioning from ICE to a EV. So for us, EV, we have been taking more as an opportunity than a threat. And that is why we have been consistently building a portfolio of products in the EV segment, which is you can say unparalleled in the industry. And in terms of the existing products, there are only two products into our joint ventures where you don't see a consolidation at top line, which is the CNG kit and the filter, which has some risk, obviously, because they don't have application into EV. But all other products, be it lighting, be it seating, be it blow molding, be it airbags, infotainment, switches, everything, alloy wheels, everything will have application in both ICE and EV. So from that perspective, it's not a threat. Actually, it's an opportunity for us.
What would be the turning point when you would say that my EV business is more than ICE engine or ICE business?
Yes. So that's what I was trying to say a little while, that if you see the Q4 result itself, where not all of our EV products are in operation and not that all the EV business is locally sourced. There are OEMs who are still importing some of the components, so it is not that 100% in India. But despite that, if you see our total revenue of two-wheeler segment for past Q4, and of that, if you see the volume which are going into EV, it is almost 8.5% of revenue, whereas the EV penetration of total pie is only 4.5%. So that's the delta you are seeing. If we would have been only in the old existing businesses, maybe we would have been in line with the industry 4.5%, but actually it is like 8% plus. So that's the shift I was trying to say that we are expecting in terms of migration from IC engine to EV, where not only your existing products, but also the new products gets into play.
Bora, as we wrap up the conversation, wanted your sense regarding the outlook for FY24. You ended the year FY23 with a revenue growth of 35% at a revenue profile of 11,000 crore and margins were close to 11%. Come FY24, what would these numbers look like?
Yes, ma'am. So, you know that we normally don't comment on the top line. What we say is what is in our hand, because 90% of our revenue is directly going into line fitment to our customers. So we don't second guess our customers. But if you see from industry volume perspective, this year industry have grown by roughly around 13%, whereas we have grown by 35%. And that has been our endeavor. How do we consistently outgrow the market? So if industry grows X, how do we grow 1.5X or 2X? And that has been our endeavor to consistently outgrow. So that's in terms of revenue. We do expect that outperformance versus industry growth to continue forward. And also in terms of margin, our expectation is we will hold on to this margin range, which is in the top quartile of the industry, which is between 11 to 12%, which the guidance we gave for the last year. We are holding on to the same guidance for the next year as well.
Okay, so on that optimistic note, we'll let you go. 11 to 12% margin band is what you're expecting, and good luck for maintaining that industry leading growth when it comes to the top line as well. We'll let you go, Mr. Bohra, on that note.